I know I'm fine, but the money makes me.
What is going on, everybody? Welcome back to another video. And in this video, I want to go over, last video we went over the wheel strategy. This video, I want to go over, if you don't have enough funds in your accounts to do the wheel strategy, how you can mock it with way less money. You're talking like $100 and you can start doing this. Now, it's not going to be some insane lucrative, you're going to become a millionaire thing tomorrow, but you can mock this strategy that a lot of the rich people do, and it opens up a lot of cash flow for people that people don't realize. Again, if you can't afford to buy stocks and things like that, but yet you want to get involved in this game, again, remember, I'm not a financial advisor whatsoever. Full disclosure, I just manage my own money and that's it. I don't manage outside money. I don't want to manage outside money. It would cause way too much stress, and I got enough going on in my life. So, SPY, the S&P 500, the same thing that you are basically buying in your 401ks, Roth IRAs, anything like that, it all mocks the S&P 500. I hate to tell you guys that unless you're literally putting it in bonds. So it's trading at $600, $601.30. We have these lines. You're going to see why I have these lines out here right now, but SPY options is going to be the way. Again, if you guys don't feel comfortable using options, paper trade them. I highly recommend going in, paper trade them. But the one thing, and the key to this strategy, it's called a credit spread strategy. Now, what I do is I sell credit spreads on put options that are really far out of the money. Now, how do I do that? It's very, very simple. It sounds a little complicated. I promise you it's not. You are going to use two options on every single one of these trades, and you are going to be able to create a spread between them, and it allows you to make money. So if I'm doing these, I'm always going out 35, 45 days. I'd probably even go 30 days for that monthly income if that's what you're looking for. So, and I only sell these guys on red days. I never sell them on green days. Only sell them on red days, and you'll see because you will get further out of the money, and we're going to talk more about that here in just a second. So I'm going to go 30 days because that's kind of where I like to be. 45 days is optimal, but again, I like that. We'll go 37. We'll go happy medium here. So I'm going to go figure where this is out at, and I'm going to go sell, and I'm going to sell a put option on this. That's a major thing on this. Everybody buys options. You guys have a big probability against you. If you learn how derivatives work, which is what a option is, I know there's a lot of fancy lingo around all these. I want to make it very, very simple for you guys. I'm going to go out of the money, which means here's the price now. I'm going to go find a cheap option, or cheaper option, that's pretty far. And you can see chance of profit right here. Right here in the center is what I'm looking at, and that's all factored based off of a delta, which is something we don't need to get into in this video. But 561, you see it's a 9 delta, which basically gives yourself basically a 10% probability of winning if we sell this. So right now that's 116. You're saying that's a lot of money here that I can lose. We are going to instantly get away from having to worry about that part. So I'm going to go to buy, and I'm going to go here. Now my max loss is $92, and my max profit is $8, just like that. And what you see here is we sold one at 160, and we're buying one back at $1.58. So your total credit is 2. So I wouldn't actually do this one, and that's because the market is closed. So I don't like that one. I would probably choose more like, I don't even like that one. Okay, so that's going to become the problem right now, what we're having. Normally on these you are going to get a little bit more of a spread, and that allows you to do it. So let's go out to 44 days. Just for the purpose of this video, I want to go to sell a put, and it doesn't even want to load these now. Of course it doesn't. Okay, well, loaded those. Yeah, so you guys can see it's not wanting to really load these, and you see they're going by 5s here. So let's just go back to 37 days. And I'm going to go back to the 10%, right around there, 561. So if we sold a 561, and this is the big thing here. So I'm going to call. And then normally you would be around this price. Now this one's going to show a couple $100 max loss, but you're gaining $15. So a little under a 10% return on your money if you're doing the math and looking at it that way. But this is, you're creating the spread, so you're selling something for $1.60, but you're buying something that's hedging against it for $1.53. That creates that 7-cent spread, of course. And that's what we're really going to make. So this max profit, I don't ever look at that. I look at this, the total credit. So I'm really going to make $7. That's really what I'm going to look at. But I'm now not having to put up $55,000 if I got rid of this. Remember, yeah, 55, almost 56,000. Now I can put up $300. And a lot of times you guys can get these to where it's not this one, it's like this one, and instead of 2 cents, you're making like 8 and 9 cents. So that's just due to the market being after hours and all those things right now. So that's where you're at. So if you really wanted to get, but you're selling a 561, guys. So if you look at it, yeah, here's a 570 mark. The stock has to come all the way down to here. So just use this tool. And again, I use this tool all the time, guys. Every time I put on a trade, there it is. That means this stock that's all the way up here has to come all the way down here in order for me to lose money. And if you look at it, I have held through this down move here, and now I'm back profitable after the past 3 days. So you will see some red possibly on these trades, but remember that you have a high probability. That is what you're looking for. So I'm going to get rid of this one because I can't put on this trade, or I honestly probably would for you guys. Those are the trades that you're looking for. You are looking at creating a spread. And guys, this is the S&P 500. If you just continue to zoom out, it's up and to the right, guys. Up and to the right. Of course, you have your Enigmas, 2020, 2008, all those things. I'm not too worried about a 2020 happening right now or a 2008 happening right now. I don't think that we're there. I think that they're going to hold this thing up as long as possible. So I do think that this is a better trade than what a lot of people consider, and a lot of people don't even know about it. So with that being said, that is a put credit spread. Allows you to gain income. You can do these weeklies. I have never ever had luck doing the credit spreads weekly. I do them pretty much monthly. That, like I said, that 30 to 45 days out on SPY, and it works. And actually, I do them a lot on SPX, which is not on Robinhood, on TD Ameritrade and E-Trade. I do them on the SPX because it's more tax advantage. But that's, you got to start making money before you ever have to worry about taxes. So with that being said, thank you guys all for watching this video. Please leave a comment below if you have any questions at all, and I will see you guys in the next video.